Good morning, everyone. Welcome to this global stock update for the 10th of December. And the title this week is Opportunities Galore, and that's certainly the case, especially in America, where the rally and the advance there is just so broad that there are literally just opportunities more than you can possibly take advantage of. And they're moving right now. These are not ones that are might do something in the next few months. These ones are moving right now and moving very consistently. But we're also seeing some better signs of life in Australia as well, outside the top 100. And I'll just touch a little bit on that in this video as well. So let's get into it. So the very significant sector rotation continues. Technology is certainly one of the lagging sectors now. It had been a leading sector for the best part of 2 years. And technology will be back. There's no question about that. But at the moment, there's some profit taking going on in that sector. Money is moving to where the participants believe there's going to be the best effect of the tax cuts and the other things that Trump is trying to do. So in the meantime, money is coming out of technology and it's flowing elsewhere. I'm also going to be looking at the stock and commodity trend update as normal, and just to mention portfolio analyst last week, and thank you for those that sent some feedback. It was really gratifying to get that really positive feedback, and I'm glad you're enjoying it. So last week there were 3 good local stocks presented, and also did quite a lot in depth on a sector and industry group level in America. So clearly members really enjoyed that. Now, American stocks were higher by 10 points on the week, and it was a new all-time closing high. Didn't quite make it to the all-time highs, but that was a bit of a spike a few days ago. But certainly that's the highest close we've ever seen, above 26.50. Now, the very significant sector rotation continues to be the dominant theme. But the market breadth is still extremely high. Money is not coming out of the market. It is just rotating around different sectors. And that in itself is really, it's sort of a de facto consolidation or correction. We're really seeing the correction at a sector level. A mild consolidation for the index remains a possibility or a probability, depending on how you want to express it. But I just can't see the environment where it's going to be anything other than relatively mild. The beneficiaries at the moment, housing, financials, some parts of financials, transports, and some parts of industrials are really where the money is going at the moment. The outlook remains very robust for all the reasons that I've been talking about now for several years. None of the precursors to a market top are in place. They take time to build up, and none of them are even remotely on the horizon. So I just can't see any way that 2018 is probably not going to be some sort of repeat of what we've just had. And if the tax reform does get through in its current form, then I think that's only going to enhance the outlook. The US dollar on the march higher again. That pushed the Australian dollar down. Just take a quick look at the Aussie summary here. So our dollar dropped to almost 75. And as I've been pointing out now, we've got supports at 73.5 and 71.5. Our index gained just a couple of points on the week and still can't hold above 6,000. It had a little look above it, but just couldn't hold it. And really the only reason that we went up at all was there was a bit of a minor bounce in the banks from oversold. But there's just not much else happening in the top 100, and there's certainly no trends. Now, the resource minnows are providing some opportunity. These are high volatility, high risk opportunities, so they're not for everybody. But we're certainly seeing a lot more interest in that sector now. Okay, let's take a look at a few charts. We'll start with the S&P. We'll be a bit quicker length of video this week because not a lot has changed. So this is the S&P. We had a dip on Monday and Tuesday and then recovered in the remainder of the week. And look, there's just absolutely no change in the character of the market at all. You've got to go back here to July, August to see any sort of movement to the downside, and even that was pretty mild. It only lasted from the 8th of August until, well, probably the 30th of August, so really about 3 weeks of going sideways. If we look at the NASDAQ, this is a QQQ ETF on the NASDAQ. Not quite at all-time highs, and that reflects the fact that technology stocks are getting some selling and money going elsewhere. But look, it's really nothing to really take note of, really. This is IWM, which is the Russell 2000 ETF. It's a little bit off its highs. We had a reversal on Monday. But again, it's really quite sector and industry group specific, and money's just really rolling around to a different place in the market. US dollar index has really picked up this week, so we've come off the lows. I think we'll find that this retracement of this last move was exactly 61.8%, and now we're starting to move higher again. The fact that it's pulled back beyond the 38.2, that would, if it only pulled back to the 38.2, that would be a sign of strength. We did pull back further. We're still getting higher highs and higher lows, but there's obviously still plenty of selling around. So I think that means that the US dollar advance is not going to be particularly robust. It'll just probably move ahead at a more leisurely pace. But as you would know, if you've been following these videos for a while, I believe that the Australian dollar will head below 70 at some stage. It's taking a lot longer than I would have expected, but that's currencies for you. But I think we will see the Australian dollar in the 60s in the not too distant future. And that means that funds overseas in American dollars are going to get a big boost from that. Just while I'm here, we just look at the Australian dollar. So we're now down to 75.05, and that little excursion above resistance was fairly short-lived, and you can see we're now well and truly back down into this range, which has got a low at the moment of 71.5. So, and then there's another support level here at 73.5. So a couple of levels for the Australian dollar to get through. Looking at the ASX 200, you can see we had a run up above 6,000 in early November, again in late November, and again on Friday, but just can't hold its head above that level. While I'm here, let's look at the US. Let's look at gold. There's gold on a weekly chart, so you can see it. It certainly did come off, and we're now down below these highs. This is not a particularly encouraging sign for gold. So we've broken down below those previous highs here. I was prepared to accept a little bit of a dip underneath, but now that we've now broken down from there, we're certainly heading down to the next area of support, which comes in around the 12.25 mark. But look, gold and gold stocks looking pretty shaky at the moment. So if we look at GDX, we also saw a breakdown. This is a weekly chart on GDX, so we saw a breakdown there. So we've now broken out of that rising wedge pattern. So I'll leave it there for another week or two. But clearly gold stocks just not responding at all and remain within this trading range, and it's possible that GDX could head back down and revisit $20. So not particularly encouraging signs there. So gold down $46, down to $12.48. It raises the question whether gold is being shunned in favour of Bitcoin. I don't know whether there's any validity to that or not, but certainly there's no appetite for gold at the moment, whereas the appetite for Bitcoin is nothing short of startling. It's just quite incredible. Precious metal stocks, so GDX dropped out of the wedge and it really does look pretty vulnerable. Moving on to other commodities, copper fell under $3. That was partly US dollar strength and partly a crackdown in China, caused a sudden downdraft in copper. Crude oil was all over the place a bit. It dipped sharply and then recovered, but still ended up down about $1 on the week to 57.3, and I think we're just going to continue to move around in this range between 54 and 61. Now, the biggest gainers at an industry group level within energy were coal and renewables, and they had a huge week of gains. So I'm talking between 12 and 20% for the week, which is huge for an industry group. So the leading companies within those industry groups would have done far better than that. But as far as the rest, the energy production companies, the pipeline companies, the drillers, they all pretty much lagged on the week. There's the spot copper chart. You can see lower on the week there, and I did have a crude oil chart there, but it's must be hidden. So crude oil really just down a little bit. So just to wrap it up this week, markets are refusing to correct at the index level. And I say with good reason, because I think if you're looking at the index level only, then what we're seeing is this sector rotation. But the corrections are occurring at a sector level, and as just a few examples, the China majors, like Alibaba, for instance, were down 15% off their peak a few weeks ago. The US tech majors, so Amazon, Facebook, down between 8 and 10%. So, when you're getting 10 to 15% corrections, if that was happening at the index level, everybody would be cutting their wrists. But because it's happening while other stocks are going up, you're not really hearing much about it. And so I think we are getting a correction, but it's just not happening at the index level, or it's not being seen. Now, portfolio analyst this week, because I had such good feedback on what I did last week, I'm going to be doing a bit more on that, on what the leading sectors and industry groups are, and where the gains are being made right now, almost on a daily basis. There really are some fantastic trends. I'm also going to address the question whether the US market, everyone wants to tell you that the US market is overvalued, but I'm actually going to pose the question whether the US market is actually undervalued at this point in time, and that if these tax reforms get through in their current form, that what the impact could be on the US market and therefore on global markets. And I'm also going to be looking at a few Aussie resource opportunities as well. And as I said earlier, these are high risk, high return, high volatility, but there are certainly a few little spots where I think the potential reward far outweighs the risks. There's my contact details for those that would like to communicate with me. And just a reminder, if you are not a member of Portfolio Analysts, there is a free 2-week trial available. And I'll be back with you next week. Cheers.